Hey, what's up, everybody? Thank you for joining me. Very important stuff to talk to right now, so stick with me. Understand, institutions are trying to profit from the market. Well, shit, everybody knows that. Now, the easiest way institutions are going to profit from the market is by fooling you. And I'm going to talk about specific instances, but they have these crazy swings and they get you to doubt yourself. They make you scare sell. You feel like the victim. And if that's true, I'm here to help you. Now let's talk strategy first, okay? Strategy for me is I make a stock or an ETF and I get to know it like family. I know everything about it. The same way you know your daughter's height, weight, eye color, hair color. I want you to learn a stock or an ETF the same way. Now, lately, I've been playing the TQQQ, and I can actually pull it up to talk about this specific example that I'm sharing. So let me just pull that up. You got the TQQQ. Okay, it's sitting at 22.50 right now, or 22.49. I'm going to go back to the 5 minutes so we can see what happened yesterday. Now, as we closed yesterday, and I was doing the live stream yesterday, here was the TQQQ right at 22.49. And I said to everybody that was watching yesterday, I said, if this goes up to 22.84, I'm going to buy puts. So what happened? It spiked all the way up to $23. So my puts got purchased. I was read it first. And then what happened? Well, we had the drop this morning. I got out before the drop. I got out on market open. I paid $77.50 per option. I sold for $100 per option. Okay, so I made about 27% on that trade. Then what happened? If I had held longer, it would have been good. That option went from $1 to 66 cents within the first 5 minutes. I was planning on re-entering at 62 cents. It never got hit. But that option went way above $1. So instead, okay, because I was a bear this morning, but instead, I saw the bottom here and I said $22 is generally the bottom for TQQQ. $22 right there. You can all see it on the screen. So what happened? It actually dropped below. I bought some calls at $22. Thinking that it would ride up to $23, and I'm still in those calls. But more specifically, and we'll break it down by the 1 minute, okay? Those calls went from 80 cents all the way up to $1.08. I mean, from 70 cents up to $1.08, which is a 52% gain. Did I sell? No, I was greedy today. And then I rode it all the way back down. And then at this point, my position was only up 3 or 4%. Did I sell? No, because I was greedy today. Then my position went all the way back up twice more to over $1. Did I sell? No, because I was looking for the market to go higher. Now, as I talk to you guys, the market looks like crap right now. However, it seems to have higher lows. So we already touched, and I can easily bring up the SPY, but I'm just showing you 22.33. So I would be worried if we get to 22.33 as we're sitting at 22.40 on the TQQQ. And the TQQQ is a 3-time ETF leverage of the QQQ, which is basically technology. So if I see this technology drop below 22.33, I'll start to worry. If not, I'm going to still hold my position and I'm going to look to exit around $23. Okay, if it doesn't happen today, which it doesn't look like it will be, I have my plan in place for tomorrow. Okay, so with that said, please, if you have any questions, please ask the questions on the side right there and I will get to them. Now, understand SPY levels, and let's talk about the SPY levels because there's two things I want to talk about, the SPY levels, but also if you look at the market statistics right now, the puts still heavily outweigh the calls. So I just mentioned to start this broadcast that the institutions make their money by selling you the puts and by selling you the calls, and then by manipulating the market. So you're buying here, your price is going down, you're selling, you're taking the loss. Who's taking the victory? You think it's other retail traders, but it's not. It's the institutions. So they're here to make you fooled by the market. Now, I'll give you another example. The SPY ranges, okay? As the SPY was recovering this morning and it looked like a step up graph, I said there was a 6% chance, told this to Discord, they could pull the rug out from under us, okay? And the SPY could drop. And when I said that, the SPY was sitting at 376, like 50. And I said it could go down 2 full points, just 374.50, because that's where support was on the SPY, and that's where support will continue to be. Wherever the SPY is trading right now, understand if we dropped, you're looking to see support. So let me explain what that means. It means whatever stocks that you're in, Apple, Tesla, Netflix, Google, whatever it is, if the SPY is going to have support, so are your stocks at that level. So when you follow the SPY, you should always have the SPY, the QQQ up to see what the markets are doing. And then you can see if your stocks are reacting more positively or less positively to that. Next thing I wanted to just bring up real quick. I think we put a link below, or we're going to add a link below. I started using the platform moomoo, right? M-O-O-M-O-O, rather than Webull, rather than Robinhood. I really just don't like Robinhood. It's been very clear to me why I don't like Robinhood. I saw a show about what they did to people with the AMC removing the buy button. I will never trade on Robinhood again. Now, Webull, the same thing. I like Webull, but they seem to block all my posts. So this moomoo is unfiltered. You could drop links to YouTube. You could drop information there or whatever have you. So that's what I'm going to start using. I'm watching the TQQ right now. It's dropping. So I'm actually going to check out the SPY. Maybe we'll pull up the SPY and talk together. I see there is one comment. Let me just go and add that while I check out the SPY. Okay, the SPY is sitting at, wow, it's funny that I mentioned 374.50 because that's where the SPY is right now. Let me see if I can actually pull up that chart and we can look together and I can tell you what it looks like to have support. Oh, man. Oh, there's the SPY finally. There we go. Okay, SPY, let's put up the 1 minute chart and let's bring it up because there's some hard selling right here. Let's get you a full screen. Okay, now I'm looking at the 1 minute chart on the SPY and we just dropped below 374.50, and I said that we likely get a bounce at 374.50. So it would not surprise me to see a bounce. Now, there is some heavy inflow, and we're sitting at 2 p.m. So again, I'm not a believer because the institutions are trying to tell us one thing. Okay, we're going to force it down. Everybody starts selling, and then all of a sudden, let's see where it bounced earlier. Go back to the 3 minute because we were right at this level basically. On the 3 minute, it bounced off 374.10. We went below that this morning, 373.83. So again, I'm expecting the SPY just to bounce off the history. 1, 2, 3, 4, 5. We saw it 5 times today. Generally, you'll see it about 8 times today in a single day. As you can see, volume is picking up. So if I were going to enter into some call options, I'm going to wait till we see a turnaround. You want to see a reversal before you just hop in something. So again, you use a 1 minute, or at least I do. I'll tell you what I use. I use a 1 minute chart as like a sniper weapon. I see it dropping. I see the volume. It tells me, okay, get interested. Here's what you're looking for. Now, again, for me, I'm not a bull or a bear, but I did mention that I thought the SPY and the market in general would trade between a certain range. I said 372 on the SPY, maybe a high of 379, possibly 380 if it's extremely bullish, but it's definitely not extremely bullish. With that said, the supports in those levels are 370, 372, 374.50, 377, and then above, which would be like 379, which we hit the other day. So again, we're trading at 374.55, 45. We're struggling in that area because the institutions, they see the market the same way that I do. They know what the support levels are. They know who's buying and when. In fact, they probably know it before us. A lot of us use, again, Webull, Robinhood. They pay for order flow. So they see everybody in exactly what you and I and the rest of the retail traders are doing. And as we're selling, they're like, okay, time to buy back in those positions. Again, it's a head and shoulders. We sit at 374.55. We'll probably see 376.50 at some point later today. And there's a good chance tomorrow morning we might wake up at either 378, or if the market wants to drop, we could see 371 in the morning. So there's a wide range. That's why I'm telling everybody, please have a strategy. Don't follow people just blindly. Don't say, okay, the market's going to bounce because it's so bullish. You know, if you have a reasoning, so here's the reasoning going to this week, okay? You had Monday, the Dow was up 750 points. Tuesday, the Dow was up 800 points, okay? Started the first quarter of the last quarter, first 2 days. And then you had Wednesday, which was yesterday, the Dow was down 400 points. And then what happened? It worked its way back to even before turning a little red at the end of the day, probably, you know, somewhere between 100 and 150 points. And then you had today, and again, today they let the market sell off a couple of times, and then it got bought up pretty quickly, sold off, and it's at that hovering point. If the market was going to sell off and capitulate on itself, we would have seen that already. If you were one of those people and you think we're going back to 360 on the SPY or 3,600 on the S&P, I get that you're bearish. I was bearish going into this week, but I looked at volume, I looked at demand, I saw what they're doing to certain stocks. There are certain stocks out there like Upstart. Upstart's probably up 5% today. Does Upstart have great earnings? No, it's a totally speculative play. So once there are certain speculative plays that get beat up the most and start to turn around, that's when the market follows. Now, a couple of influences on the market today, and I'll point them out real quick as I do to my Discord. You want to look at the US dollar. So the US dollar is at 112. It's up almost a full percent today. It was 111 yesterday. It's at 112 today. So understand, if you're borrowing $100 million, it just costs you $1 million more. 1% move in the change, okay? So you have to understand that makes it more expensive for our markets. Then you go to the 2-year, right? The 2-year interest rate, which was 4.31 like a week ago, dropped all the way down to 4.06, and that was Monday and Tuesday. Where is it right now? 4.20. So it's up 14 basis points, okay? As the 2-year goes up, more expensive to invest in our markets. Same with the 10-year, okay? And they currently have an inversion. The 10-year spiked a little this morning. It was up to 384. Now it's sitting at 380. So it's come down a little, but understand, here's to help you for diagnosing the market tomorrow. When you wake up tomorrow morning, you want to look at the 10-year note. You want to use 3.80 as a gauge. If you wake up and the 10-year interest rate is 3.75, the market's probably going to be green. The same thing on the 2-year. You could use 4 let's say 222, because that's where we are right now. 4.22. If you wake up and it's 4.5, 4.25, 4.30, it's going to be a red day, making it more expensive to invest in our markets. And then I just like to check out oil, make sure oil's not doing anything crazy. And it's not. It went down last week. I mentioned on Friday that I was looking to get into oil this week. However, oil spiked on Monday. I stayed away. We're talking about $75.50. That's when I sold my calls. Oil's got to be up past $80, the XLE, which is the exchange. Matt, that super fast low today, which caught us. How can we anticipate those heavy moves up or down? So hard to get those elevators. Okay, so easy question or easy answer. In volatile markets, and I said today, in fact, I said yesterday, we're just going to trade in between a range. So again, I'm not worried about my position. Where the SPY's at 374.50 right now. It'll be at 378 at some point tomorrow. It'll probably be at 373 at some point tomorrow as well. So it's going to trade in between a range. So now you tell yourself that, and you say to yourself, okay, when it gets to the higher end of the range, and that easily could have been today close to 377, because the first rejection, which happened prior to noon, was right around 377, and then you saw the one that happened a little after noon, and then the markets tanked lower. So you're looking for rejection levels or support levels. If the SPY supports at 374.50 right now, you could get into calls or any bullish position. And then you're looking to exit out of your position when the SPY goes to 377. You're like, I'm in Tesla. Who cares what you're in? The point is, when the SPY hits a certain point and rejects, they're going to start selling Tesla, Microsoft, Apple, Google. When the SPY hits a support level, which I believe it's doing at 374.50, it actually went like 50 cents lower, but 374.50, they're going to start buying Amazon, Google, Apple, Microsoft, whatever stocks it is. You know, the stocks that are in the Russell, it's a little more different. The smaller tech stocks, a little more different. I'm talking about, you know, whatever's number one in class, NVIDIA, AMD, et cetera, et cetera. Okay, so how do you anticipate moves like that we saw just a drop off? I told Discord when we were at 377, there's a 6% chance of a rug pull. And a rug pull would equate from us dropping here instead of pushing higher and retesting 374.50. And literally in 10 minutes, the market dropped and we tested 374.50 and we went under. So the best thing to do, Mariano, is just secure profit. Don't get into a position too soon, all right? I've got a guilty conscience of doing that. So what do? When I'm about to buy something, I wait 5 minutes. That's my own lesson, because I generally buy something and it goes down, or I sell something and it goes up. So now whenever I'm going to make a trade, I say, okay, 5 minutes. You're just holding your position. You're not doing anything. In 5 minutes, you'll reevaluate. But on the way down, you're looking to see the bottom. If you're going to catch a falling knife, don't try calling the bottom for any call options. If the market keeps dropping, you're not calling it. You want to see a confirmed reversal. When you see the reversal, you have the plan in place. You're like, when I see a reversal, I'm going to buy Rivian. When I see the reversal, I'm going to buy Tesla. Whatever option you're looking at. Now, the thing is, when it does reverse and all of a sudden it just gains half a percent or a quarter percent like that, you don't want to chase. If you missed out on grabbing those options at the bottom, you certainly won't want to chase, because what's going to happen is you're going to end up paying up here, and then it's going to revisit the bottom again. So again, my entry on my latest position of the TQQQ was so good that I'll tell you right now, I got in at 70 cents. So even though TQQ is pretty beat up, hey, I'm still green, and I'm green by 10%. I got it at 70 cents. There's 78 cents right now. So that's a little over 10%. Yes, I was up 50%, but being in at such a good entry allows me to hold my position. Would I hold my position if it turns red? Shit, well, that would really upset me. If my position turns red, I would say to myself, oh God, things can get uglier tomorrow. However, I would have to zoom out, go back to what I originally said. What I originally said is the SPY is going to trade in between a range for the remainder of the week. I said that on Tuesday, so you have Wednesday, Thursday, and Friday, okay? And I said on the low end, we'd probably see 370. On the high end, we could see 380. I've narrowed that down a little. So now I say on the high end, 379. I say on the low end, I don't think we're going to see under 372 being the remainder of today or tomorrow. Again, I'm talking about the end of the week. Now, if you look at the market as a whole, I guess we're still in a bearish predicament, but definitely starting off this month, there was some purchasing. There was purchasing on Monday, Tuesday, Wednesday. $1.8 billion of retail money went into the market on Monday and Tuesday. So they were chasing. So there's no doubt in my mind, we were definitely going to see some consolidation. When we entered the market on Tuesday and the market was ripping, I was telling everybody I still thought the market was going to consolidate and come down. Whether you're a bear, and if you're a bear, the market can come down, or if it's going to consolidate and just find a new support level, the market can come down. So again, right now the SPY is sitting at 374.20. Again, the downside on it was 373.89. So if I'm thinking calls, which that's what I'm thinking right now, I'm thinking calls that expire probably on Wednesday. All right, because I don't want them to expire tomorrow, because if I'm wrong about the market tomorrow, that kills my trade. And if I'm wrong tomorrow, that means I have to get a significant rebound on Monday. So that's difficult. But if I'm wrong tomorrow, get a rebound on Monday, it can come to fruition on Tuesday and Wednesday. That's why I would go out to Wednesday, now being Thursday. So I would buy an option contract expiring in 6 days. Again, I would be looking at SPY calls. Now, I don't think the SPY is going gangbusters. I said it would trade in between a range. But if the SPY touches the low on the day, which is 373, like 80 something, and I say tomorrow we'll probably touch 378 at some point tomorrow, well, shit, that's a 5-point move. That's like a 1.4% move. And an option play, if you grab the bottom and you can get a 1.4% move, even if I'm buying out till Wednesday, that'll probably turn into about a 52 to 54% gain. So again, I'm looking at SPY calls. Since you guys are here and I talk about trading with me, let's go to the SPY. I'll tell you exactly which ones I'm looking at buying, because I'm going to do it with you. So I'm going out again 6 days to October 12th, which is next Wednesday. There's no reason to go any sooner than that. If I wanted to get in the money, I could buy something like the 370s because there's high volume there, but there's high volume all the way up from 370 to 375. I'm just going to take a look at the open contracts on the put side and just see if there's a massive discrepancy. There's not. It's probably like 58% puts, 42% calls. Now imagine if I saw a massive discrepancy to the put side, 70% puts, 30% calls. I would say, holy shit, be careful, stay away, because the market is telling you they're betting on it going lower. Okay, so the SPY is dropping. It's almost at 374. So let me finish up this trade here, because I'm probably about 20 cents away from entry. So I'd be looking at the 370s. I'm not going to buy a lot of them because they're expensive. They're $7.69 right now. The reason I would buy in the money like this is because if I get the 368, 378 tomorrow or 379 tomorrow, these would be going for probably about $10.50. So if I could purchase, and again, it's about 10 or 12 cents away at $7.50 or $750, I'll just buy one contract. Maybe I'll buy 2 contracts. But if I'm paying $750 and I have the opportunity to sell them tomorrow for like $1,050, $1,075, that's going to be a 50% gain. Okay, I'm limiting my downside. Well, let me put in my order first. Okay, so the SPY is at 374.21. These are selling for $767 right now. I'm going to put in for 750. It's a nice, easy round number. I'll put it for $750, and I'll buy 2 contracts, and that'll be it. And if it executes, guess what? I just saved on entry. I was willing to pay $770. If I get it for $750, I just saved 3%. Now, on larger trades, on a smaller denomination like $1 or $1.10, then I might look to save 20% because they're more speculative. They're generally out of the money or close to the money. But the cheaper the options are, the more speculative they are. So on the larger price options, say you're going to buy a Tesla option and it's $2,000 a contract. I'm not going to suggest to you that you underbid by 20%. I would say, great, if you can make an extra 4% on Tesla, great. And same thing on the way out. If my contract's very in the money, it's not going to be a wide range. When say the SPY goes to 377 later, these I know will be worth $9 and change. If I buy it at 750 and they're worth $9 and change, that's a quick like 38 to 40%. So again, that's how I put together a plan. That's how I put together a strategy. I'm only talking about the TQQ because I follow that, and the SPY because I follow that. You need to follow the SPY to know where the ranges are. Again, we saw support on the SPY earlier today, 373.80 something, right? Right now it's sitting at 374.20. I say it's going back up. If I was going to give a prediction where we end the day, I don't know, probably 375 or 376 in between those two. And what we'll see tomorrow being Friday, lots of contracts expire, probably some huge swings, some huge volatility. And when we see that, again, I'll just give you a prediction. We'll see 373 on the downside, maybe 372. And on the high side, we'll see 378, possibly 379. So again, if you take the wide range of the spectrum, 379, 371. Okay, so it's an 8-point range. Now, again, if you're in a long position, and I didn't get my buy yet, and now it's 30 cents higher than my purchase, so it's up 4%. Again, I'm not going to chase. Should the market go up here and the SPY is sitting at 374, almost 50 again, 374.49, it was just 40 cents lower, okay? I'm not going to chase. I'm not going to pay an extra 4%. I tell you all, make sure you save 4% on the way in. So the last thing I want to do is spend an extra 4%. That's like saying the option's $1. I'm telling you guys to pay 96 cents. And then instead of paying 96 cents, I go and pay $1.04. That's a huge difference. You got it at 96 cents. I got it at $1.04. I'm 9% over you. You're making like 30%. You're like, I'm out. I'm only up 21%. I'm looking for 25% to sell my position. And it never happens. Okay, so today, again, I had diamond hands today. I could have sold my position up 50%, up 50%. Then it went flat, then it went flat again. Again, diamond hands today. I don't usually have diamond hands. I usually sell, take the 25%. All right, I would have got 50%. I would have took 25 here. I would have re-entered and took 25 here. And that's how I make 50%. All right, those people that are waiting to hit home runs, you're looking for 1,000%, 2,000%. Well, you're lucky because Friday's coming up tomorrow. So if you want to play a home run play, and again, these are why they're called lotto plays, because you don't have to buy the stock. It expires tomorrow. But if you are bearish, then you find a stock that looks like crap, and you say, okay, if it goes down 5% tomorrow, then it'll be trading like, let's use a firm, okay? Let me look up a firm right here, because that tends to move with the market, and it's more of a speculative play. And if you played these options last week, I think they went up like 800%. Okay, so a firm, just like Upstart, is getting tons of support today. And you understand the market's a little beat up today. The SPY is down 0.67%. A firm is up 1.27%. Upstart is up 5%. So I say to myself, okay, a firm, it's at $21.19. So I'm looking for the cheapest options. Actually, they're all pretty damn expensive right now, because I won't want to pay 40 cents going into tomorrow. So if I'm looking for a lottery play, I'm looking at the Affirm options. I would wait till tomorrow morning. I would say to myself, the perfect thing for a lottery play tomorrow morning would be if the market dipped it open and then spiked the remainder of the day. So I would say to myself, if it's going to dip it open, let me look at these $22 calls that are currently $24, and let me see if I can get them for $6 a contract tomorrow morning. And if I get them for $6 a contract tomorrow morning, and then a firm goes up 6% tomorrow, or something to that extent, because Upstart's up 5% today, let's say 6% tomorrow, that's $1.27. That would make the options $22.43. If I'm paying $6 and then they become worth $42, that's a 700% gain. So again, when we talk about lottos and you're looking for tomorrow and you're looking to make a killing, you say first, do I think the market's going to be green or red? Now, if you say green, you're waiting for the morning dip to enter your lotteries. You don't enter them at open and pay too much money. You want to buy your green put, your green calls when your stock is dipping, when your stock looks like shit, and you want to underbid. I'll bid $5 a contract. I'll buy 100 of them. I'll spend $500 or something to that extent. And then the contract goes from $6 up to $42. Your 600 is now worth $4,000. That's what a lottery play is. A lottery play isn't not like, I'm going to buy calls that open tomorrow. I'm going to buy puts that open tomorrow. No, if you want to buy puts tomorrow, you're hoping the market spikes at open and you can take some lottery puts. Now, me, again, I still think we're trading in between a range where 374.50. We're just sitting here right now. The next level down is 372. I don't think we go there because the low on the day was 373.83. So if we're not going down to the low and we still have 1.5 hours left of trading today, and the market was being bought up at two different points today, yesterday at noon, and for Monday or Tuesday, I'm still guessing we're going to 377. And if I end up holding overnight, then I'm going to look to exit at 379. Because if I have to hold my calls, I want max value. All right, with that said, I don't see any more questions here. I appreciate everybody riding the market with me. Again, we're sitting at 374.50. Upside is where I think we're going, probably to 377. Understand the downside, all right, is 372. If it breaks support, if it goes past 375, then yes, you could write it in your books. We're at least going to 376.50, like a whole $1.50 up, which would be 0.4%. If we retract and you see us test again, you're not looking to get into any calls unless we go to 373.86, unless you want to be more chancy. And if you're more chancy, make sure you give yourself enough time. All right, give yourself at least 5-6 days to be correct. So if you're in SPY calls rather than expiring tomorrow, go for next Wednesday. If you're looking at options, unless you want to play a lottery because you're 100% sure of your stock direction tomorrow, because your options will expire tomorrow, then go out at least a week. That way, if you're incorrect, you don't get scare sell tomorrow. Let's say they tilt the market before they pump it or something like that. I mean, everything we see is manipulation. You have to understand that. If the markets were going to rip lower, it's going to be because World War III started or China invaded Taiwan. It's not going to be because the 10-year spiked or oil spiked or some shit like that. It'll be war related. It'll be uncertainty. Other from that, you're going to see this trading in a range, and that's how I'm trading, and that's how I suggest you guys trade. And I'll see you guys later, hopefully tomorrow. See you guys.